Okay, everybody, it's me, Gregory Mannarino. It is Thursday, August 12th, and this is my post-market wrap-up. How about this? Another set of record highs for this market. The Dow Jones Industrial Average, the S&P 500. That makes like 3 days in a row. Again, what's keeping it going? The bad economic news. It just does not stop. We got even more after this morning's report, where we found out, another 375,000 people applying for first-time unemployment benefits. Inflation is skyrocketing. It's absolutely out of control. But again, I know most of you understand this, but let me say it again. There's no connection whatsoever between what the stock market is doing and what the economy is doing. They can shut down the economy. They did completely. And the stock market still went higher. No correlation anymore. Doesn't matter when you have a central bank literally buying it all. And despite the freak show, the creatures from the Fed coming out lately talking about tapering sooner than later, the market is laughing it off. It's laughing it off. And it's astonishing to me. So on top of yet another all-time record high for this market here, let's talk about a few other things. 10-year yield stable. Crude oil slightly lower today. The dollar flat to slightly higher. Silver caught a bid. Gold finished about flat. Cryptocurrencies under a little pressure. Okay, whatever. So that's the setup. But really, I don't even know anymore what we should really be, what we really should be focusing on. I think more so than ever is getting ourselves in the right spots. Now I want to talk more about that, so we understand that Citigroup, yet again, is warning about this stock market. Now let's think back just a little bit, you and me. The last warning that we got from Citigroup about the market about to, fall or whatever, since that time we've hit record high, record high, record high, and record high. So I don't know what to make of this whole thing. Like I said earlier, I don't know what they're looking at. I don't understand. Look, I look at all the same things that these big banks do when I'm moving around my own money, when I'm talking about the market to you. I don't understand it. So with this new warning, I don't know, but we did get another bank today warning about the market, and that is J.P. Morgan. Look, people, I really don't know what these banks are looking at. They know as well as you do, as well as I do. There's no correlation between the stock market and the economy. I mean, I've done this for you a million times. I said stock market would keep going up as the economy craters. You've seen me do that. Well, that mechanism is going to stay in place. Nothing matters anymore. Valuations are stupid. Forward guidance don't matter. P/E ratios, forget about it. And anybody who understands the keys to this market, which are 10-year yield, dollar, crude oil, and the Fed's balance sheet, if you're watching these things and realize that this is where the stock market is deriving value from, so that's where you got to look. It doesn't make it that hard to understand what we need to be doing from every angle. From every angle. I'm not a one-trick pony. I hope you're not a one-trick pony either. You got to be diversified if possible. If you can't, you know what I'm going to say. If you can only invest in one thing, in my opinion, that's physical silver. Betting against the debt hyper bubble. Okay, that's how you do it. But anyway, so with these warnings from Citigroup, these warnings, this new warning now from J.P. Morgan, what do they expect people to do? What are they telling their clients to do? Sell whatever positions they have? Are they telling their clients to short the market? You have to really wonder about this, and you know my take on it, this market does need a real correction, which we have not had in a very long time. Doesn't happen anymore. If these banks here are talking about a normal correction, well, they shouldn't be warning about anything, because pullbacks are bullish. They're bullish, people. For you assets rise. They pull back. They establish a new floor. Up. We all understand, all of us that follow this blog, that there is going to be a moment of reckoning, and it's going to be nothing short of biblical. But again, how do you gauge when that's going to happen, when that moment is going to occur? Not by watching the stock market, but by understanding the dynamics that are driving it and where the stock market is deriving value from. And the biggest thing is the debt market hyper bubble. You understand? I think you do. Anyway, let us move forward here. So producer prices are soaring. And let me ask you, where do you think, or who do you think is going to be paying for all that? You are. I am. Those prices get passed right on. And I mean, duh. We keep hearing about this issue with inflation. Okay, I still want to know when, and maybe you can tell me right here in the comment section, when do you think, I'm going to say it again, one of our members of Congress, the ones that care about us so much, they're going to call the Fed chair before a committee and have it explain why they continue to run their inflation creation machine. If we're really booming, this economy is booming, right? That's what they're saying. So tell me again, please, because I really need to know. Why is the Fed maintaining emergency monetary policy in the middle of an economic boom? Because we're not in a boom. We're in a crash. We're cratering. And they're eliminating the middle class by design. They're actually eradicating a whole class of people. And they're trying to push their agenda on us, people, yet again with all this nonsense. I'm not even going to say it because they're not going to let you see this video. So we also found this out today, people, and this is no surprise to you at all. So home prices continue to skyrocket at their fastest pace ever on record. With that happening, home affordability is at an all-time record low. Does this all to you, seriously, sound like an economy that's in really, really good shape here? We're booming. We're doing great here. Doesn't sound like that to me. The mechanism to continue to rob people blind is in full force. That is these suppressed rates, which deliberately push cash into risk assets, stocks. Henceforth, why? Record high. It doesn't matter, like I'm telling you. The economy, well, they can shut it down, and they did. And the stock market still hit record high. What's responsible for that? It's the mechanism behind it. Artificially suppressed rates create a deliberate environment of risk. Boom. Up goes the stock market. Nothing else matters. And you got the Federal Reserve here, talking about home prices. I want you to consider this, okay? The Federal Reserve right now, because they're buying a minimum of $40 billion a month in mortgage-backed securities, this is artificial demand. You understand? Suppressed rates, inflating bubbles, distortions. You know all this. Look, it's pretty obvious to me, and it should be to you, that we have no representation in this country anymore. This is not the United States of America. This is the hub of the new world order. And you can imagine that what you're seeing around you is going to get monumentally worse. But again, there's opportunity here, people. There's opportunity despite the fact the games that they play with precious metals the games that they even play with cryptos as well. The distortions in this market being created by artificially suppressed rates now since 2008. A Federal Reserve determined to fulfill their end game to be the lender and buyer of last resort. It's all in our face. It's all right in our freaking face. Anyway, it's crazy. Absolutely nuts. Anyway, so that's the story. New record high for the market despite an economy in absolute free fall with no end in sight. Our debt to GDP ratio is at nightmare proportions right now. And that proves to you that our economy is contracting. If you look at the debt to GDP ratio, we're not growing at all. Zero. We are contracting. But you're not allowed to know that. All right, people, look, I'm out of here. Very important video as usual. Lot of stuff here we need to understand, to absorb, take in, and realize what we need to do about it. This blog is about putting this information together and acting on it, okay? Love you a lot. I mean that. Please share this. I'll see you in the morning.